Hi, this is Jay Hummel. Welcome to the deep dive in collaboration with Investopedia. I'm so excited about today's episode. This is a concept and a topic that I've wanted to do for months now because we get so many questions on it, but I wanted to make sure that we had the right guest. And I can't think of somebody who's better to talk about this topic than Vinay Nair, the founder and CEO of TIFIN. And the topic I'm talking about is artificial intelligence and how AI is going to impact financial advisors. Vinay, I know you're extremely busy, man, and I know we've been talking about this for months. I really appreciate you coming on the show.
Thank you for the invitation, Jay.
So, Vinay, just tell the viewers a little bit. Vinay's humble. He could probably go on for about 10 minutes. His resume is impressive. Just tell the viewers a little bit about your background and about what you're up to at Tiffin.
Sure. Well, my background, I got trained as an engineer and as an economist. Started my career as an academic and an investment manager. And finally, I think found my calling as an entrepreneur. As you know, I've started a few companies, and these days I'm building TIFIN. TIFIN is a platform of products. Think of it as applications of AI for financial services with a specific focus on asset management, wealth management, and insurance. So we have a collection of apps, all applications of generative AI, supervised AI for asset and wealth management with business outcomes that would go under productivity or growth as the main benefit for the businesses.
Man, that's great. I'm probably going to oversimplify this, Vinay, and for the viewers, Vinay has forgotten more in his team about AI than I know. So correct me, Vinay, if I'm not thinking about this correctly. I kind of think of AI in financial services as it impacts advisors basically in three categories. One category is make them more efficient in the mid to back office to take tasks off the plate of people that we normally would have hired operational people to do. The second one is how do I better prospect and get better data to be able to go out and connect with potential new clients. And the third category is what I would say is better outcomes. And that could be defined as better investment results or better communication to my clients or to my prospects. Am I thinking of it right in those categories? And if I am, I would love for us to maybe go back and forth on those three categories.
Yeah, I think there's definitely a pretty decent framework to think about it. I would say some nuance to add to that, but efficiency, uh, it, there's one way to think about it, which is reducing costs, increasing margins. Although I think we're also seeing that AI is particularly valuable in areas to where bottlenecks exist for scalability. So it's actually not about reducing cost; it's about increasing productivity of the same team. We see this, for example, with a portfolio consulting group or an outsourced CIO group that has to produce a certain number of proposals for advisor clients, and the demand is just way too high. So the same team can now produce 10 times more proposals in a year than they did with AI as a capability. So I would put all that under efficiency. Sometimes it's cost reduction, sometimes it's really facilitating more scalability. Another area which I think people perhaps don't appreciate enough is what technology is doing over decades, and AI is just accelerating that even more, is reducing the cost of delivery,
Mm-hmm.
cost of servicing. So the minute you reduce the cost of servicing, let's say personalized delivery, new channels open up that previously didn't make sense to take advice into. So if you thought of it as a minimum requirement for wealth had to be 5 million for the business unit economics to make sense, that number changes as the cost of delivery drops. And I think that's opening up new areas, which is why I think one reason we're excited, because you can now take advice to many more people as the cost of delivery drops. So as a growth potential, it's not just, I would say, prospecting or identifying, but also opening up brand new channels that previously wealth management perhaps didn't go into, right? And
Well, and do you think, Vinay, I've always had this belief, right? The number used to be 125 to 135 clients was basically the number, and you and I have spent time talking about this with our friend Anil Arora, about how do you think about scaling an advisor practice? And just growing up in the industry, it's always been like 110 to 135 was the number that people said an advisor could handle. To me, one of the things that I think is interesting, what you guys are doing and what AI is going to allow, I think what you say is not only cost of delivery, but at scale. So now, as an advisor, when there's a shortage, because they keep talking about the shortage of anywhere between 17,000 to 35,000 advisor shortages in the next 5 to 10 years, is now, as an advisor, I can handle 300 clients instead of 125, and I can serve them not only equally as good as I can serve the 125 today, but I can serve them probably even better. Yeah, is it kind of the way you're thinking about scale?
Absolutely. I don't think there's going to be any advisor shortage precisely because of that. On the contrary, I actually do think the better advisors will just outcompete the advisors who are not adapting to the usage of AI, to the usage of more complex products, etc. So even if there are, call it, today there's roughly, say, 300,000 advisors in our industry, right?
Yeah.
RIAs and non. I think serving about, call it 45, 50 million households. So roughly, you're right, about 150 clients per advisor. If you're talking about a ratio of 300 to 1, and you have the same number of advisors, you're serving 90 million households. So I actually think that's an oversupply of advisors compared to the demand. And so you would have the best advisors serving those 45. And we like to say advisors with AI will outcompete advisors without AI, essentially.
No, I agree. So AI kind of in a lot of worlds, I think with financial advisors, when I talk to them or to home office individuals, it's kind of this esoteric idea, right? Everyone hears about it, everyone talks about it, chat GBT, all those things. Is there a way you could give the viewers kind of a specific example or two on when they think of AI and how it could help their practice or their business? How are you thinking about it at Tiffin in kind of a real like down in the weeds example?
Yeah, let me try. I think the at the core of it, what AI is doing is it's changing how workflows get executed and how experiences, how delivery is happening. So just like PDF into digital, digital will become conversational. And that's where generative AI is changing a lot of the experiences. That could happen in client portals, which we think will all be conversational. That could happen in advisor interaction layers instead of some old school workstation where you have to go click, click, click. It may all be conversational, but the advisor can have an interaction with the home office or with their workstation on the back end. So those are examples of how experiences will change. And the benefits is, of course, as we said, less time to do things, more personalization, etc. So that's one aspect of how these how experiences will change. The second is workflows. So AI agents you can build these autonomous agents that execute workflows. That means that let's say you want to build a client proposal, as we discussed. That workflow could be automated using an AI agent, which enables you to do it in a second. Or write an investment memo. Let's say you're doing diligence as a home office in there. These are all examples of workflows, the nature of it totally changing because of AI agents. Now that means that you need way smaller teams. In fact, we are working on a project to build that single person RIA, where all the middle office is a collection of agents interacting with legacy software. Right? That's an example of disrupting the workflows that exist. So these are examples where, to go back to what we spoke about before, we see a world where you could have a single person RIA serving 300 people with conversational layers and autonomous agents. And that's the implication of what AI could do, I think, to the advice business.
And I think you probably my guess is you get this question a lot, and I've asked you, you and I have talked this topic a lot. So I just want to get the viewers to get a behind the scenes view through the show of what you and I have talked about. I think the question that you and I have talked about a lot is that you get is AI got to replace the financial advisor? And if that may happen someday, what timeline should financial advisors be concerned about? So would love to banter that around a little bit.
Yeah, I think the answer for us unequivocally is no. I think, as I said before, the I think advisors with AI will replace advisors without AI. It's what we believe. At the end of the day, our view is that the complexity in wealth, I think, requires touch plus tech mechanism for delivery. And I think that we believe advisors would be able to be a lot more personalized, provide much better advice, handle much more complexity, build higher margin, better businesses for themselves, all using this toolkit. But unless the minimums are very, very low, I think where the advisors do not, the unit economics don't make sense, we don't see completely autonomous advice agents happening.
Yeah, and I think we've talked about it before, and I like, to me, I think your framework's right, in my opinion. Now, if I'm one person, but you've talked to me a number of times about you believe the future is going to be a client's going to basically have three categories of assets, right? They're going to have their retirement assets, which is what most Americans have, which is a 401k plan or an IRA. They're going to have an advisor account, right, and a managed account with an advisor, and they're going to potentially have a self-directed account, right, where they could use AI tools because, frankly, maybe they don't need the advisor for every dollar of their overall financial wealth. Is that still your view on how you think those categories are going to work?
Yeah, absolutely. I mean, as you see over the last 20, 30 years, uh, say 30 years ago, we had this view that either you're self-directed or advised. But today,
Hmm.
if you look at an individual's wealth, 50% of self-directed advised investors also have an advisor. So what you're seeing is, as an individual, you have your wealth in all three locations increasingly, which is your self-directed, say, brokerage, you have an advisor or three, and then you also have a 401k or some workplace assets. And as self directed gets easier to access, as advice gets lower and lower minimums, as workplaces provide better and better services, the overlap is just going to keep increasing. And you see this in other countries also, by the way. They can call it pension as opposed to 401k, but I think the same dynamic exists globally. And that's about, in the US, it's about 70 trillion across these three places, these three locations. And we think that eventually it's the same person who just has it in these three accounts.
Yeah, just because it's no different than I always wonder, selling financial advice is no different than selling consulting, right? And it could be HR consulting, it could be benefits consulting, it could be insurance, it could be financial advice. When you look at the models outside of financial services, that's just kind of the way it works, right? There are things that the end consumer wants to make a decision on, and there are things that they need help on. So
Totally.
I think we're moving towards where a lot of the other industries already are. It's just it's a consumer trend basis that I just think financial services have taken a little longer than some of the others. And to your point, we've taken a lot longer than Australia or the UK, or Germany, or some of the things that are happening in Europe or Australia as it relates to how financial advice is delivered.
Yeah. And Jay, I think this is also one thing, though, which the industry has been doing is larger firms have created platforms that cater to all three locations and they get the synergies from it. Right? I think a Fidelity or a Morgan Stanley or an Empower and increasingly other firms, they have workplace wealth management and self-directed. And the same user, they're able to cater to that individual from all channels as opposed to keeping it separate. So we see that as another trend in the industry, that you'll see more convergence between these various channels, because at the end of the day, it's the individual that you want to form the relationship with, not with the.
I think that's exactly right. Well, this will be my last. We could talk this all day, Vinay. I wish we could do a 2 hour episode. The question I always ask every guest, as you know, is what's the one thing, and it doesn't have, it can be AI focused, it can be whatever you want it to be, is we always have really smart people like you on the show. And I always ask, what's the one thing you think, as you think about our industry, that people aren't talking enough about or are missing as it relates to sort of a macro trend for our industry?
Well, so I think outside of AI and technology wise, I think one thing in our industry, which and I call our industry, broadly manufacturers and distributors and enterprise providers across all these channels. I think that sometimes we forget why we exist. I think which is really to reduce the cognitive load for people. It's not to get an additional percent return or something else. I think most of the time, this is why I also think advisors are not going anywhere. I think most of the time, people just don't want to deal with the complexity of all the choices and decisions that they need to make. You make money to not think about money for most people. And I think
Hmm.
that our industry sometimes forgets that and kind of almost encourages you to think about money more and more, which defeats the whole point. So I think how you resolve that and how you build business models, I think eventually will be the ones most successful.
Yeah, I think that's a great answer. I mean, I think that's a great answer. And people were always surprised because I grew up in the industry. I mean, I have a financial advisor for that reason, right? Not that I couldn't do it on my own. I can cut my own grass. I can do a lot of things that I would want to do, but I don't want to do that because I got other things that I want to do that I want to take the mental load off. So I just think I think that's a really smart answer.
Great. Thank you, Jay. Great to spend some.
Well, Vinay, thanks, man. I hope you agree. You're the last episode of this season. We obviously launch our new season in September. So next season, I hope you'd consider coming back.
Yeah, would love to.
All right.
Love the conversation. Thank you.
Well, thanks for watching. We'll see you next time on the deep dive.